Past performance is no guarantee of future results. It's true for investments, and it's certainly true for entire years. The overall performance of 2023 was encouraging in many ways, with inflation coming down while inflation-adjusted income went up.
History was not a good guide to 2023. Some things really were different this time around. At least so far, that inflation-unemployment trade-off that people thought would require a severe recession in order to bring inflation down hasn't come to fruition.
The economy exceeding expectations in growth and jobs.
Labor is in a stronger position than it has been for much of the past few decades. Unemployment is very low, the economy is very strong, there's a shortage of labor, the labor market has changed after the pandemic, and so there's a sense that labor is in a stronger position.
And certainly the stock market way outperforming what we expected for the year.
What an incredible year for equities. I was wrong. I predicted, David, that the markets would be down this year because, well, gee, the Fed raised interest rates 525%. Should have had a rough market.
But one way in which 2023 was not at all encouraging was in climate change, giving us the hottest year on record.
What we're seeing now is just repeated examples of natural disasters, climate extremes happening at scales we haven't seen before, in places we haven't seen them occur before. And so we're really in this period of growing natural disaster risk.
And now we're on to 2024, and the need to anticipate how much the trends we saw last year will continue into the new year. Or, for that matter, whether we were reading the signals correctly even last year.
Inflation looks relatively under control, but there's a lot going on underneath the surface, and there are still substantial risks. My gut is still that the market is underestimating the inflation risks in the current situation, and therefore probably overestimating the amount of Fed cutting that is going to take place. But it's a fairly close call.